The taxes that we paid, like I went back and looked at our 2019 return, we paid an extra 25 grand in taxes because our CPA didn't know what they were doing. And I went back and looked at it. I was like, well, crap, right? And I didn't want to go back and file the amendment. So I just kind of ate it. But that was a $25,000 mistake that I made. Ultimately, your CPA is there to advise you and to file your taxes. Ultimately, they're not your tax strategists. Like true tax strategists are extremely expensive. Look in the mirror, you're your tax strategist. That's what you're doing right now, listening to this. Use ChatGPT, use Claude, Gemini, whatever AI tool. It's quite good at actually explaining some of this stuff out to you. So you can go to your CPA and ask intelligent questions. And more importantly, you can take their responses and verify that for yourself. That's extremely important. You have to have personal ownership of your situation. Welcome back to STR Like the Best. I'm your host, Michael Chang, here with Elizabeth. Hey, Liz.
Hello, everyone. Great to be back.
The topic we're going to cover today, which this will be about a 15-minute episode, but we get a lot of questions about how to qualify for the tax benefit, right? The STR tax loophole benefit. And there's a huge misconception about REPS, which is real estate professional status, versus the STR tax loophole. I want to clarify that and demystify that. I'm going to set the stage here. REPS, R-E-P-S. REPS is real estate professional status. Now, first, I'm going to give my disclaimer. I am not a CPA. I'm not a licensed tax professional. So everything you listen to here is not tax advice. Verify with your tax professional. But this is the part where a lot of people get confused. Number one, real estate professional status and the STR tax loophole are two different things. One does not go to the other. Real estate professional status is extremely valuable. It will allow you to get a lot of the same benefits as the STR tax loophole. Namely, you can take depreciation expense, a non-cash expense when you buy real estate, and use that to offset active income. REPS allows you to do that. The STR tax loophole allows you to do that. But they do it in different ways. REPS is, and I'm going to summarize here, you must do at least 750 hours, right? These are 750 hours minimum. Second, you cannot have another job. This has to be a majority of your work. So if you have a job or you do anything else, this has to be greater than that. So if you're working 50-hour weeks, 200 hours a month, 1,600 hours a year, your real estate activities has to exceed that. So it has to be over 1,600. So basically think about it, a minimum of 750, and it has to exceed anything else that you do, which makes it extremely hard. If you have a full-time job, it's basically impossible. If you ever try to claim that, you're going to get audited by the IRS because it's so difficult to do. And lastly is those 750 hours have to be in 7 defined activities. Selling real estate, for example, counts. Now, a lot of people have this misconception that like, if I become a real estate agent, I automatically qualify to get rep status. A lot of you have that. We had that misconception. That is 100% wrong. Getting your real estate license does not get you reps. Conversely, not having a real estate license doesn't mean you can't get reps. The license doesn't mean anything. It's what you do with it or do without it that matters. So let's summarize. If you're working a job, W-2 job, you're not going to really qualify for reps. Very, very hard. Mm-hmm. If you work and your spouse, stay-at-home mom, your stay-at-home mom or dad gets a real estate license, it doesn't give them reps either. They have to really participate 750 hours at least in one of these 11 activities: selling real estate, operating real estate, developing real estate, and 8 others, which I won't go into. So that's reps. Now the STR tax loophole. Why is this different? STR tax loophole is this, right? It says that if you buy a short-term rental, number one, you operate it for 7 days or fewer. Your average length of stay for all your guests is 7 days or fewer, right? So this can't be a long-term rental. It can't be a mid-term rental, right? It has to be a true short-term rental, 7 days or fewer. That's one, right? Second is it can't be used as a second home. There's a personal use limitation there, 14 days or 10% of the rented days. Number two. Three, the most important part is you have to materially participate in the activities of this short-term rental. They have 7 ways to do that. I won't go through all the rules, but these 7 rules are different from those 11 rules on the on the reps. They're completely separate things. These 7 rules, and you may have heard some of these, it's like the 100-hour rule, the 500-hour rule. I'll talk about the one that's most applicable to most people. 100 hours between you and your spouse, if you're married, and no one else does more than you. It needs to be clearly documented. We use an app called the STR Tax Loophole app that you can find on Apple Store or Google Play. It's the strtaxloophole.com. In order to do this, why is this different from reps? Number one, you have to buy a property. Reps, you don't have to buy a property. Number two, the minimum is 100 hours between you and your spouse that you can do it together. Where reps, minimum of 750. And it needs to be greater than any other job that you have. STR Tax Loophole does not have this restriction, okay? And three is, and this is one a lot of people mess up on, STR management, that does not count towards reps. If you're managing your short-term rental 7 days or fewer, it's specifically excluded from reps. There's actually a tax law case that addresses this specifically. It's the Bailey Tax Court Summary Opinion 2011, 2011-22. They specifically say you cannot do this. So they're completely different things. The tax court has already ruled on that. So why is the STR tax loophole, in our opinion, better or more accessible? Number one, you as a married couple can do it together. Two, you can do it with the full-time job. Both you and your spouse both work full-time. You can do that. If you are both working full-time, you will not qualify for reps. I guarantee you. So now it's opened up for full-time employees. And number three is you don't have to go and get your real estate license or sell real estate or anything like that, right? This is, I want to buy real estate for my financial future. I believe real estate is a place where I want to invest my capital, right? I want to own the asset. I want to be diversified in the stock market. That's why it's a better fit. It's an investment strategy, not a work strategy. You can do it if you work full time. It's a lot more accessible. A lot more people can do it 100 hours more than anyone else, which is a key part, versus a strict 750-hour requirement. That is the law. If you're listening to this, and hopefully, and I know it's dense, but it's tax law in a sense, but like these are things that people really get wrong and misconceptions on. So verify this with your CPA, of course, like I said, see which situation you are in. But just know this, just because you have a real estate license, just because it's all on TikTok and Instagram, doesn't mean you qualify for reps.
Mm-hmm.
Don't make that mistake.
And I will add on, even CPA, you need to ask the right CPA. Not every CPA understands the short-term rental tax loophole or the benefit or reps. So you want to find a CPA that actually is really well-versed in that. In the very beginning of our investing journey, I would say when we first started, we didn't have the right CPA and we were given the wrong advice. And we had to change course halfway and realize how much we were missing out on.
Well, also the taxes that we paid, like I went back and looked at our 2019 return, we paid an extra like 25 grand in taxes because our CPA didn't know what they were doing. And I went back and looked at it, I was like, well, crap, right? And I didn't want to go back and file the amendment, so I just kind of ate it. But that was a $25,000 mistake that I made until now we work with our current CPA. And David's great. We get good tax advice. Getting the right CPA that understands real estate, short-term rentals. And also, I think just you as, ultimately your CPA is there to advise you and to file your taxes. Ultimately, they're not your tax strategists. Like true tax strategists are extremely expensive. Look in the mirror, you're your tax strategist. That's what you're doing right now listening to this. Use ChatGPT, use Claude, Gemini, whatever AI tool. It's quite good at actually explaining some of this stuff out to you. So you can go to your CPA and ask intelligent questions. And more importantly, you can take their responses and verify that for yourselves, because a lot of times they're wrong too, or you're not getting the complete picture. That's extremely important. You have to have personal ownership of your situation. And you just can't say, made the mistake that I did back, 7, 8 years ago. Like, well, my CPA did it, so it must be right. Because like no one's infallible. Everyone makes mistakes.
And I think that's a good point too. I have seen a lot of these cases is where people really just blame on the CPA they have. The difference between a CPA that file your taxes every year versus a true tax strategist. What are the use cases for most people?
Well, I mean, tax strategist is usually like a lawyer within a large tax firm, and they're, $1,000 an hour. They're like, it's very expensive. And most tax strategies are actually expensive to like set up and maintain, right? So they're really, you have to be worth, 10 plus million, like kind of make it worth it for you. Normal CPA is just there to file your taxes. And if you're just W-2 and you have some stock portfolio, maybe you own your home, it's really simple actually. What you really are looking for is a thought partner, someone that's going to actually answer your questions, where you do some of that, like I said, you do the pre-work ahead of you. Like, hey, I read about this STR tax loophole. it's 7 days or fewer. I do 100 hours. I need to buy a property. Is this correct? Does it work for my situation? Like, that's a really good question to ask and see what they say. They verify, they say it's good, then you have something to drive off of. But you ultimately are responsible for your situation. So you come to them with the best way I've seen it work is like you come with them with ideas. Hey, I looked at this. I've done some work on this. This is where the AI stuff is really quite good, actually, because it can give you some grounding on that, and go to them with real questions and that you've actually done the work ahead of time, and so that they're willing to have that discussion with you. Come educated, right? That's how I found it to be the most effective. And I think for you too, right? Just as you have a lot of friends that are stay-at-home moms or stay-at-home parents. Talk about how hitting that 100-hour requirement is doable for someone in that situation.
Yes. And I think it's very manageable. If you have a spouse and you are a stay-at-home mom or the parents, you're really well positioned to leverage this STR tax loophole to satisfy that 100 hours between you and your spouse and more than anyone else that work on your property. And that will allow you not only have the flexibility to kind of manage your time between family and then working on an investment that actually help your family to grow wealth over time, to save that taxes, and that taxes becomes your salary in a way for you to invest for your family. And that's extremely powerful way to compound your wealth without sacrificing your quality time with the family. At least that has what I found the most rewarding part and component of it. I feel I'm contributing to the family in a really meaningful way financially, and also from the family perspective. I get to spend time with my kids. Still, I can manage my hours very reasonably. Of course, there's always more work upfront for your first property. You're learning it. But as you repeat this system and strategy year over year, it gets faster, it gets better. You have a better system. And this is a legacy thing. You can do it one every year, twice every year. It's very meaningful.
Yeah. And maybe here to kind of end the episode here. And I think this is important, right? Being a stay-at-home parent, you're just a parent. Like you kind of lose the, kind of professional educational training that you have. And this is a way to apply that in a different way while being kind of the parent that you want to be.
100%. And I think another surprise or pleasant surprise I have found, at least in the 10 years we are working on this together, is you really get to see a different side of your spouse when you're working together toward a goal, a financial goal that's to make your family better. It sparks a different side of joy and conversation. Of course, there will be fights, disagreement, but you really learn how to resolve those very quickly because, hey, things gotta keep moving. You can't really just get stuck on this one argument forever and don't talk to each other for 2-3 days. The business is gonna run, the investment have to keep going. So through that process, I feel like we have learned how to really improve our communication and actually make the relationship better.
It's like just more conflict resolution, right?
Yeah.
More communication, more conflict resolution between spouse, your business partner, and then I think through that training just kind of makes you just get more reps on how to solve problems together. Like how do we approach these things? Like what do we define as success? And I think when we have success together jointly, right, that isn't just kind of kids or whatever, right? It's like real numbers, dollars and cents coming in. It elevates and expands the relationship. And you get to do podcasts together like us.
Yeah, pretty fun.
Yeah. So folks, I hope you enjoyed this episode. And if you've wondered about reps versus STR tax loophole and how it could apply to you and your family, I hope this episode was helpful. If you enjoyed this episode, please, again, subscribe, share with a friend, share with your spouse, share with someone that is interested in STR real estate investing, short-term rental real estate investing. And thank you for your support to the show. We look forward to having you listen to some of our other episodes. So thank you very much. Appreciate it.
Thank you. See you next time.